Welcome, and thanks for joining us at EMII.com. I'm Ananya Bhatia with your hedge fund headlines. Today's Thursday, May 28, 2009. Proxy advisory firms RiskMetrics and Glass Lewis are supporting hedge fund Schoenfeld Asset Management in its proxy fight with luxury retailer Saks. According to the New York Times, Schoenfeld, which oversees about $3 billion and owns 1.5% of Saks, has asked shareholders to alter the way the company presently elects directors. The two advisory proxy firms suggested that shareholders of Saks vote to declassify the retailer's board, install a majority voting standard, and withhold their vote for one board member, Warren Neal, and the other three nominees to the company's board at its annual meeting on June 3rd. Staying with hedge fund news, Swiss fund of hedge funds Castle Alternative Invest is planning to list on the London Stock Exchange. According to the Financial Times, LGT Capital Partners will dual list its $546 million fund on June 5th, and the shares will be traded in U.S. dollars. The fund, which is on a discount to net asset value of 27%, has discount control mechanisms including an annual repurchase faculty and treasury share repurchase arrangements. At the end of March, the fund was invested in strategies such as equity long-short, event-driven, relative value, macro, and managed futures. And in more hedge fund news, asset manager Bramden Alternatives has asked its investors to reject a proposal to oust its current board and realize its portfolio. According to the Financial Times, the proposal by property tycoon Vincent Chenji's investment vehicle Alcina seeks the removal of chairman Brian Larcombe, Cesar Anquilar, Michael Buckley, and Nicholas Moss. Alcina was seeking to replace the board with its own nominees, Jonathan Carr, David Copperwaite, and Mark Tucker. The trust has received interest from a third party in acquiring its issued share capital and has pledged to identify the bidder by June 9th. And in other hedge fund news, private equity firms Bryan Capital, KKR, and Warburg Pincus are competing for a stake in Chinese electronics retailer Gome Electrical Appliance Holdings. According to Bloomberg, the sale of the Gome stake, valued at $374 million, will help the retailer cut its debt and boost revenues. Bain Capital is planning to offer $500 million for about 20% of Gome. And that rounds out today's hedge fund headlines. Thanks for joining us at EMII.com. For more details on these stories and much more, click onto our asset management channel online and read the full stories and latest developments.